Yes, a very good morning to all of you. Right, so yes, I have recorded the MCQ theory video for the RTP May 25, then after that for the MTP1 May 25, and now recording for the MTP2 for the May 25. Right, so very important part of your preparation for the audit subject, would be also looking into the MTP RTP suggested question, and you preparing for the theory part of the paper for which you need to do the good amount of the writing practice, and for the 30 marks of the MCQ part of the paper, you have to keep on sharpening your MCQ skills. Right? You have to keep on sharpening your, guessing skills, your confidence in sticking to a particular answer, or, deciding upon having the confidence to select the right answer and so. Right? So that is why it would be very beneficial, for you if you could, see all these particular MTP or even go through it on your own. Right? All these particular MCQ as well as the theory questions. Okay. Right? So let's begin with the question number 1, right? So what does it say? Shrenik Limited was set up initially as a private limited company. Okay. Subsequently, it got converted into a public company. The company's management has plans of expansion, but the business was not growing in an organic manner. Therefore, the management decided to acquire the competitors. During 2024, the company acquired 2 companies in India and France in September 2023 and January 2024 respectively. Right? So during the financial year 23-24, it says the company acquired 2 companies, one in India and one in France, September 2023 and 2024. So that is before 31st of March 2024. The company controls both of these companies as per the criteria laid down in the Companies Act 2013 as well as the applicable accounting standards. The management started discussions with the auditors regarding the audits, wherein it was also pointed out by the auditors that the management should also prepare consolidated financial statements if they want. Is it something like if they want? I think they have to prepare if they have a subsidiary, unless and until the subsidiary under AS or Ind AS meets the criteria for the exemption. Management needs your advice on the same. Okay, management must prepare the CFS as per the requirement of Companies Act. Management has a choice. Whenever the answer option says choice, that always is never a choice for us. Okay, management has a choice not to prepare CFS but should go for that, considering that its true performance and financial position then can be demonstrated. Management could have prepared CFS if the acquired companies would have completed at least 1 year post acquisition. Any reason they are making over there. Management must prepare CFS but should include only the company acquired in India. Why? No, they should include both the companies, right? So management must prepare the CFS as per the requirements of the Companies Act 2013. Wonderful. Right, coming to question number 2. The firm from which you are pursuing your articleship training is the internal auditor of Sukh Limited. While conducting the audit of the medical expense reimbursement of the company employees, you came across some bills which are clearly not medical in nature and some others which have been overwritten. During the discussions, the accountant points out that the employee is a functional head who enjoys a significantly higher medical expense reimbursement limit, and that you should ignore these bills as the amount is not material. You will. Right, so ignore the bills as it's a high level employee, enjoys a higher medical expense reimbursement limit. Right, you are the internal auditor, right? Article doing the internal audit. Accept the explanation and the bill. You say, ma'am, we are not that easily. We can't accept. Recommend that the claim should be reduced and clear guidelines should be issued to all the employees on the matter with the provision for disciplinary action. Okay. Recommend that the employee be asked to submit fresh bills to avail the tax benefit. Okay. So entire take it from zero again. Recommend that the employee be taxed on the aggregate amount of the suspect bills. Okay. So fresh bill, suspect bill, and recommend that the claim should be reduced and clear guidelines should be issued to all the employees on the matter with the provision for the disciplinary action, right? So this looks like what a constructive and the productive feedback being given to the management that recommend that the claim should be reduced. Clear guidelines should be issued to all the employees on the matter, because today one of them has done it, later on many others could also do it with the provision for the disciplinary action. Okay. Gin Limited, which is based in Mumbai, is in the business of manufacturing leather products since 1995 and wants to acquire Om Leather Private Limited, which is based in Pune and engaged in the business of selling the leather products manufactured by different companies. Before acquisition, Gin Limited wants to get a due diligence review to be done of the Om Leathers. Gin Limited appointed SS and Associates for conducting the overall overall due diligence of the Om Leather, right? So they've appointed a CA to conduct the due diligence of Om Leathers. During the review, the accountant asked Om Leathers to provide the financial projections of the company for the next 5 years, right? So now again, areas to be covered in the financial due diligence. One of the areas, like we look into the past, we also look into the future of the organization. So financial projections on the likely, more optimistic and the pessimistic basis. Okay, but Om Leathers refused to provide the same and claimed that financial projections are not a part of the due diligence review, right? So areas to be covered in FDD, does it also include the financial projections? Yes. Whether the objection raised by the management of Om Limited, is it Om Leathers, is it correct? Give reason. The objection raised by Om Leathers is correct, as due diligence doesn't include the review of financial projection. No, it certainly includes, right? So students who've left the chapter on due diligence in option, they will think logically and they'll say, yeah, due diligence is to be done. Why financial projections to be checked? Okay. Objection raised by Om Leathers is not correct, as due diligence refers to an examination of a potential investment to confirm all material facts of the prospective business which a company wants to acquire, and the financial projection is a part of the same. Okay. Objection raised by Om Leathers is correct, as reviewer cannot comment on the financial projections in his report. No. The objection raised by Om Leathers is not correct, as the target company cannot refuse in providing any information required by the reviewer. So anything that he asks, no, there are areas to be covered in the due diligence. So one of them is the financial projections. Okay, right? So you say, ma'am, this is the biggest point, so let us select this one. Okay, the objection raised by Om Leathers is not correct, as due diligence refers to an examination of a potential investment, evaluation of a prospective, business decision, doing your homework before you take a decision to invest, to confirm all material facts of the prospective business which a company wants to acquire, and the financial projection is a part of the same, right? So the correct option would be B. Okay, right. Now coming to a case scenario, and then after that MCQ 4 to 7. CA firm Tink and Company, Lloyds and Company, Manohar and Company respectively were appointed as the joint auditors for conducting the stat audit for the financial year 24 of Anitya Limited. They were having differences of opinion with regard to the following points: serial number, reason for the difference in opinion. Manohar and Company wanted to refer to the work of the expert, Mr. Tanmay, in the audit report, but the other joint auditors were not agreeing on the same, as such reference was not relevant to an understanding in the final audit opinion, and also it was not required by any statute, right? So it's a combination of 299 and the 620, right? So as per SA 620, auditor, can you make a reference to the work of the expert in your report? It says unmodified opinion, no reference. Modified opinion, you may make a reference, but even though if you make a reference, CTBR continues to be responsible. Prior permission of the expert is to be taken, and even if the name is mentioned, it says the auditor, you have the sole responsibility for the audit opinion expressed. But what does it say? Modified opinion, you make a reference to the work of the expert only if the modification in the audit report is in the context of the work done by the expert. Only if the modification in the audit report is in the context of the work done by the expert. Over here, what does it say? Such reference was not relevant to understanding the final audit opinion, and also it was not required by any statute. So then can a reference to the work of the expert be made in the report? No, then no reference to the work of the expert can be made in the report. Okay. Okay, certain misstatements affected information to be included in management discussion and analysis of Anitya Limited annual report, but as they were lower than materiality set for the financial statements as a whole, and so according to Lloyds and Company, there was no requirement to perform any audit procedure on the same, but the other joint auditors were not agreeing on the same for the reason that the information may reasonably be expected to influence the economic decision of the users of the financial statement. So one of the auditors considers it to be lower than materiality. Others are saying that no, it is above materiality. It might influence the decision making of the users. Okay. For a selected item, the joint auditors were not able to apply the designed audit procedure or suitable alternative procedure, and Lloyds and Company wanted to treat the item as a misstatement in case of TOC as well as in case of test of detail, but the other joint auditors were not agreeing on the said treatment, right? So for TOC, we call it as a deviation in the control, and for TOD, test of detail, we call it as a misstatement. Here what does it say? They want to call it as a misstatement for TOC as well as for TOD, right? So terminology wise it is not correct. For TOC, when you do the control testing, you come across a deviation, and when you do the test of detail, you come across a misstatement. Okay. And then fourth one, Manohar and company had determined for a particular account balance positive confirmation request was necessary to obtain the SAAE, but as it has not obtained the confirmation, an alternative audit procedure would not have sufficed its requirement. Right? So main audit procedure, if not main audit procedure, then alternative audit procedure. Alternative audit procedure also what is unable to obtain sufficient appropriate audit evidence, then SA 705 modification to the opinion. Okay, so alternative audit evidence would not have sufficed its requirement. Manohar and company wanted to determine its implication on the audit opinion, but the other joint auditors were not agreeing on the same. Oh my God, everything they have a difference of opinion. The difference in opinion in the case of Tink and Lloyds were resolved, but there remained disagreement with one of the opinions of Manohar and company, due to which Manohar and company expressed its opinion in a separate audit report. Yes, in case of differences of opinion among the joint auditors, the joint auditor having a different opinion may report separately, not bound by the views of the majority of the joint auditors. Okay, Manohar and company resigned and filed the required statement with respect to its resignation with Anitya Limited as well as the registrar, right? So within 30 days from the date of resignation, the auditor needs to file the form ADT3 with company and ROC. Okay, Board of Directors of Anitya Limited appointed Namo and Company as the joint auditor in place of Manohar and Company, which was later approved by the members in the general meeting of the company. Namo and Company, before getting appointment as aforesaid, had communicated via a registered post acknowledgement due to the previous joint auditor Manohar and Company, but the said post was received back with the remarks office found locked and a premises found locked. In the rules for NOC under clause 8 part 1 of the first schedule, we see that premises found locked, it will be considered as deemed to be delivered. And the request for NOC will be considered to be deemed to be delivered. Right? So see, that is why such an important, for us to have a clear understanding of the provision, because that is how you never know that one point they pick it up and put it in the case study over here. Right? So that is 811. Then, ascertain that the requirements of Section 139 and Section 140 of the Companies Act with respect of the appointment had been duly complied with or not by Anitya Limited. Right? So that is Clause 9, Part 1 of the first schedule. Right? So we say Section 139, Clause 9. Okay. Based on the above facts, answer the following. Whether the opinion of Manohar and Company for referring the work of the expert, Mr. Tanmay, in the audit report can be considered as valid. So it says no, yes, no, yes. Okay, no, it says as such the reference was not relevant to an understanding in the final audit opinion, and also it was not required by any law regulation. If such a reference in the audit report was relevant to the understanding of the users of financial statement, no, it was not relevant to the understanding in the final audit opinion. Yes, no, as such reference was not required by any law regulation. Yes, if such reference was relevant to any key audit matter as per 701, even though it was not required by any law regulation, nothing like that. What does it say? No such reference was not relevant to an understanding in the final audit opinion, and also it was not required by any law regulation. So no need for Manohar and Company to make the reference to Mr. Tanmay, the expert in their audit report. Okay. Next one, whether the opinion of Lloyds and Company for treating the item as a misstatement in case of TOC as well as in case of TOD, for which the joint auditors were not able to apply the designed audit procedure or suitable alternative procedure, can be considered as valid. Right? So it says no, as such item shall be a misstatement only in case of TOC, and in case of TOD it is the deviation. They are writing opposite. And for TOC it is misstatement, and for TOC it is deviation, and for TOD it is the misstatement. Okay, as such item shall be treated as misstatement in case of TOC, TOD. No, as such item will be treated as deviation in case of TOC, TOD. No, as such item will be treated as a misstatement only in case of the test of detail, and the test of control it shall be referred to as the deviation. Right? So this is the correct combination. So even though if I don't read whatever is given in the case study or whatever content is given in the question, and I just know that, whenever it is TOC, by doing TOC, you come to know the deviation, and by TOD you come to know about the misstatement, right? So that is the correct option, right? That is the correct option over there. Okay, whether the insistence of Manohar and Company, by Manohar and Company, for determining implications of not obtaining the response to positive confirmation request on the audit opinion can be considered as valid, right? So they tried to perform the main audit procedure, if not made alternative, and if not alternative, also now determine the implications on the audit opinion. Okay, right? So what does it say? No, because in such a case the auditor should have inquired the reasons for the same from the management in writing and included the same under key audit matter as per 701. Yes, because in such a case the auditor should have determined the implications for the audit and the audit opinion in accordance with 705. No, because in such a case the auditor should have obtained and relied upon the written representation as per 580 in this regard. No, because in such a case the auditor should have determined the need to include an emphasis of matter paragraph in the audit report as per 706 after considering the implications on the audit. So no key audit matter, no written representation, no emphasis of matter, straight away going to SA 705. Yes, because in such a case the auditor should have determined the implications for the audit and the auditor's opinion as per 705. Okay, whether Namo and Company would be considered to have satisfied the requirements of communication with the previous auditor. So it says no, as the communication through RPAD could not be done. Namo and Company should have tried an alternative form of communication as prescribed by the Council of the ICAI for the same. Yes, as it would be deemed that such post was delivered. No, because in such a case Namo and Company should have informed the Council of ICAI with respect to the non-delivery of the post to the previous auditor along with the reasons for the same. And no, however, Namo and Company can commence the audit of Anitya but should try to satisfy the requirement of communicating with the previous auditor at least before signing the audit report. Oh my God, they are making all stories over there. Yes, as it would be deemed that such post was delivered, because what is the rules for NOC? If premises were found locked, if the office is found locked, it is deemed to be delivered, right? Deemed to be delivered. Okay, right? So that's up to MCQ 7. Now let's come to the case scenario to the MCQ 8 to 11. CA Kamlesh was appointed as the engagement partner on behalf of Datta and Associates for conducting the audit for the third consecutive year of Pramath Limited, an unlisted public company with a turnover of 35 crore during 23. From 23-24 onwards, Pramath Limited had voluntarily adopted to prepare its financial statements as per Division 2 of Schedule 3 to the Companies Act, due to which Datta and Associates had revised the terms of the audit engagement for the current audit engagement. As per the revised terms, it was decided that the auditor's report on the financial statements will incorporate a paragraph in accordance with 706, drawing users' attention to the additional disclosures. Moreover, it was decided that management will also present appropriate disclosures in the financial statements with respect to this change. It's a matter which is already there in the financial statements that you want to highlight in your audit report. So that comes by way of the emphasis of matter paragraph. What do we say? Anything which is fundamental to the user's understanding, then emphasis of matter paragraph, and it is related to the financial statements. And anything which is relevant to the user's understanding, it is related to the auditor's responsibility audit report, then it comes under other matter paragraph. Right? So because this is related to financial statements, it will come under the emphasis of matter paragraph. Okay. Then, while auditing the entity, Kamlesh came across a business policy of Pramath Limited that required to invest some portion of its money earned in its business in securities of different blue chip company. And due to this reason, almost 55% of Pramath Limited total assets considered of such investment. So they are dealing in the shares and securities. So more than 55%. So again, it's becoming an investment company. These securities transactions were handled by a broker company, River Securities Security Private Limited. RSPL was also performing the necessary investment account reconciliation and was also preparing the mark-to-market gain and loss calculation for the entity. Pramath Limited used to rely upon the calculations performed by RSPL, and based on that they passed the MTM entry for their current investments every month. Pramath Limited relying on the controls present in the RSPL for the preparation of this entry. They also listed controls presented in RSPL in their risk control matrix as the key control. So that is service organization, service auditor. The EQCR, Engagement Quality Reviewer, CA Tushar, recommended CA Kamlesh to obtain a from the management of RSPL, to which CA Kamlesh said that it was not required to do so, as the management was already comfortable with the controls present at RSPL. So they are saying complementary user entity control, or the management is only satisfied with the controls which are there. It says additionally, auditor, do you need to obtain a type 2 report, description, design and the operating effectiveness of the controls at the service organization. Further, while conducting the audit, Kamlesh observed that the investment in certain securities was sold at a price less than the price at which they were acquired, and he didn't report on such matter as per section 143(1) of the Companies Act, without even considering to inquire into the propriety aspect of the same. Right, so 143(1)(c), what does it say? Where the company is not an investment or a banking company, where the shares, securities, debentures have been sold at a price less than the price at which they were purchased by the company. But here, is it an investment banking company? Yes. So that is why is the inquiry to be done for this point? No. Right, so where the company is not an investment or a banking company, then you need to inquire. But here it's an investment company, so no need to inquire, so no need to report. Okay. While finalizing the audit report, Kamlesh prepared a letter containing key important points to be communicated to TCWG and the audit committee of the entity. SA 260, communication with TCWG. This letter was prepared in addition to the main audit report. Audit team was of the view for the above mentioned letter, the audit team is required to generate UDIN. Right, you know, for the reports and certificates to be issued, right, it says for that UDIN is required. For internal reports being given to management TCWG, no UDIN is required to be generated. Okay, based on the above facts, answer the following. While finalizing the audit report, CA Kamlesh decided to present the early adoption of Ind AS under the other matter paragraph, as in the auditor's judgment it is relevant to the user's understanding of the audit, the auditor's responsibility or the audit report. Right, I told you, if it is relevant to the audit, then it comes under the other matter. So that is what they are saying. Right, so putting it under the other matter paragraph, as it is relevant to the user's understanding of audit, auditor's responsibility or the audit report. Kindly guide CA Kamlesh with respect to the correct reporting in the audit report as per 706. So whether other matter continues to be right or whether it should come under the emphasis of matter paragraph, because in 706 we have two paragraphs, emphasis of matter paragraph and the other matter paragraph. Okay, no disclosure is required as it is a voluntary adoption of division 2 of schedule 3. The audit team should report the change in the emphasis of matter paragraph, because in the auditor's judgment it is of such importance that it is fundamental to the user's understanding of the financial statements. Right? So emphasis of matter, fundamental and related to the financial statements. Audit team should report the change in the other matter paragraph because in the auditor's judgment it is of such importance that it is fundamental. No, if it is fundamental financial statements, then it has to come under emphasis of matter. It cannot come under other matter. The audit team should qualify as per 705 the said change as it was not required to be implemented, and this will create unnecessary confusion for the reader. So no, again this point is creating unnecessary confusion. So what does it say? The audit team should report the change in the emphasis of matter paragraph because in the auditor judgment it is of such importance that it is fundamental to the user's understanding of the financial statements. Okay. Wonderful. Next one. CA Kamlesh risk assessment includes an expectation that the controls at the service organization RSPL are operating effectively, and he contended that there was no requirement to obtain a type 2 report. Kindly guide CA Kamlesh with respect to the requirement of SA 402. Right, so CA Kamlesh's contention is correct as management has comfort over the controls at service organization for the transactions and activities which are processed there. But management has, what about the user auditor? Okay, when the user auditor's risk assessment includes an expectation that controls at the service organization are operating effectively, user auditor CA Kamlesh shall obtain evidence about the operating effectiveness of the control, which may include by obtaining a type 2 report. Right, so type 1, type 2 report if available, visit, contact the service organization or arrange for another auditor to perform the control testing at the service organization. It depends upon the auditor's judgment, and the recommendation of engagement quality reviewer is not binding upon the audit team. As a result, Kamlesh's decision will be considered correct and appropriate, as no services are outsourced to the broker company, and hence there is no need to obtain the type 2 reports. It says all this is not required. Right? So what does it say? When the user's auditor's risk assessment includes an expectation that controls at the service organization are operating effectively, user auditor will obtain the evidence about the operating effectiveness of the control, which may including obtaining a type 2 report if available. Okay, whether it is justifiable that CA Kamlesh didn't report on the matter with respect to the sale of investment, even without inquiring for the same? No, as at least CA Kamlesh should have inquired into such a propriety matter in order to satisfy that whether the sales were bona fide. Yes, as it is not mandatory for the auditor to report on the matters prescribed under the said section. No, he should have at least consulted CA Tushar before doing so. Yes, as the relevant clause for the reporting is not applicable in case of Pramath Limited. So it is not applicable in case of Pramath Limited. Why? Because it says it is applicable for companies which is not an investment or a banking company, whereas Pramath Limited is an investment company. Okay, right. Coming to question number 11. CA Kamlesh was not sure with respect to the UDIN requirement for the letter to TCWG containing important audit topics and the findings for discussion. Kindly guide CA Kamlesh with respect to the UDIN requirements for this letter. Separate UDINs are to be generated for stat audit report and the letter to TCWG. UDIN is only required for stat audit report, but it is not required for communication performed by auditor as per 260 to 65. One single UDIN is required to be generated for all items of this client. UDINs are required to be generated client-wise instead of report-wise. How creative. Okay, one single UDIN ID will be generated for the whole year for this engagement, which may include various communication by auditor to management TCWG. My God, what storytellers. Okay, UDIN is required only for the statutory audit report, but it is not required for the communication performed by auditor as per 260 and 265. Okay, right, coming to case scenario 3, MCQ 12 to 15. Okay, Mrudul, a practicing chartered accountant. Yes, you're listening to me, right? Okay, I'm so busy discussing the MCQ that I don't even have the time, you also should be so busy listening to me. You should not be busy forming any other opinion. Okay, Mrudul, a practicing chartered accountant, has been appointed as the auditor of PQT Limited, a reputed listed company engaged in manufacturing the electronic products as per the provisions of Companies Act. In addition to his audit responsibilities, he is actively involved in advising the government on the proposed legislation aiming at attracting investment and advanced technology in the electronic product sector, right? So he is the statutory auditor of PQT Limited, a reputed listed company which is engaged in manufacturing the electronic product as per the provisions of the Companies Act, right? So company registered. And he is the statutory auditor. In addition to his audit responsibility, he is actively involved in advising the government on the proposed legislation aimed at attracting investments and advanced technology in the electronic product sector. He has publicly advocated the proposed policy in the TV debates, articles in business newspaper, and advisory submissions to the government. In all such public appearances, he has disclosed his role as the auditor of PQT Limited. That I am the auditor and I am also promoting this type of business. So it is leading to some sort of a threat to the independence of the auditor. Meanwhile, CM Mrudul is also the statutory auditor of FinCorp Limited and NBFC for 23-24. While reviewing the financial statements, he observed that the company has made the following provision in compliance with RBI prudential norm for asset classification for 24. Asset category, balance outstanding rupees in crore, and provision for 23-24 rupees in crore. Okay. standard, substandard, fully secured, doubtful asset, 1 to 3 year, fully secured, loss asset. Okay, total provision for the NPA. Upon review, CM Mridul is of the opinion that the company has not done the provisioning correctly and expresses concerns regarding the non-compliance with the RBI guidelines. Okay, right. So now for standard asset, we have 0.40 and 0.25. If it is systemically important, then 0.40. If it is non-systemically important, it is 0.25. But here the question is silent. Right? So say right now, if I take it as 0.40, then that comes to, right, 0.40, that comes to 0.80, yes, 0.80 crore of the provision. Right? For substandard asset, we have a general provision of the 10%. So that should not be 1 crore, but it should be 1.5 CR. Okay, doubtful assets, what does it say? Up to 1 year, 1 to 3 year, more than 3 year, 20, 30 and 50%. So this is 30% because it is 1 to 3 year. Right? So 30%. So 30% of 8 crore is coming to 2.40 crore. Okay, and loss asset 100% provision is required. So has the 100% provision been done? Yes, the 100% provision has been done in case of loss asset. Right, so loss asset is the provision correct? Yes, but for standard, substandard, doubtful, we do have the concerns. Okay, right. So now based on the facts, which of the following statement is likely to be correct in regard to PQT Limited? Okay, the described situation can involve the self-interest threat to the independence of the uncle. The described situation can involve the familiarity threat to the independence of uncle, advocacy threat and the self-review threat. Right? So what does it say? Advocating, right? Is he's, lobbying on behalf of the electronic product industry. Right? So advocacy threats to the independence of the auditor. Okay, is the provision for loss asset of 2 crore correct as per the RBI norms, right? So loss asset 2 crore, provision also 2 crore, absolutely correct. Yes. So because the provision should be 100% for the outstanding amount, no, it shouldn't be only be 50% as it is secured. It should be nil if the asset is secured, but only if RBI has classified it as a fraud related asset. How much story they have to make? Okay, FinCorp Limited has classified 15 crore of the loan as the substandard asset as per the RBI norms. What should be the minimum provision required for this category? Right. So for the substandard, it is 15. And what does it say? 10% general provision. Right. So that comes to 1.5 crore. Right. So how much it says? 1.5, 3.75 and 1. So it is 1.5 crore. Okay, and FinCorp Limited has 8 crore in doubtful asset 1 to 3 year and has provided 2 crore. What is the shortfall in the provisioning as per the RBI norm? Right, so what did we say? 8 crore, and it is up to 1 year, 1 to 3 year, more than 3 year, 20%, 30% and 50%. So this comes under 30% category. So it's 8 into 30%, that is 2.4 crore. So how much is the provision made? 2 crore. How much it should have been? 2.4 crore. So how much is the shortfall in the provision? 0.40 crore. Right, 0.40 crore. Right, so anyways, that's standard, whether it is systemically important, non-systemically important, whether it should be 0.40 or 0.25, that is not coming only because they've not told us to calculate the exact amount, the total amount of the provision required. They are asking questions specifically for substandard, what should be the percentage, is the loss asset percentage correct, and how much is the shortfall for the doubtful asset. So how out of one, they ask this question in the theory part of the paper as a 5-marker question over there, 5 or 4 marker, wherein we said that the actual amount of the provision required is 6.70 crore. And now that same question over here, they've converted it into the MCQ, making 3 questions for the MCQ out of the same. Right, so yes, that completes our discussion for the MCQ questions in the MTP2 for the May 25 exams, right? So thank you so much for your patient listening and wishing you all the very best.